Ifeoma, thank you so much for your time. Many will say it's a necessary but not necessary, but perhaps not sufficient move by the central bank to hike those rates. How do you assess the move as it played out on Thursday?
Thank you very much for having me. So at the OMO auction, the central bank did sell less than they offered. They sold 171.66 billion versus the 100 billion which they offered. And like you rightly said, they also hiked rates more than 400 basis points. And market sentiment is that this move was to attract foreign investors in the market, because if you take a look at the movement in reserves, you notice that it has been dropping slightly, currently about at like 36.03 billion from 36.8 billion. So we see this move as one to attract more foreign investors so as to boost our forex reserves. But like you said, we really don't think that it's enough to allow foreign investors to stay in the country, because getting their dollars out of the country has been quite of a challenge. The backlog for foreign investors to repatriate their investment has been a long one. So we're watching the market to see what moves, what extra moves the central bank will take. But for now, everyone is just really cautious in trading. Market this week has been very, very quiet, and everybody's just looking towards the central bank to what's their next move.
Right. In the past, we've seen the central bank sort of fragment the fixed income market, creating one for foreign investors and one for the rest of the market, so to speak. I want to hear your thoughts on how this move alone impacts the rest of the market. So, as widely expected, there was a move to the upside in terms of yields across the board. But do you get the sense that this could signal a more permanent trend in terms of the direction of yields? Because many have suggested that we could see yields relatively low until at least the later part of the second quarter. But do you think that we could see yields picking up in general before then, given the move that the central bank is making now?
Well, yes, I believe that yields will pick up, but not as much as expected, because the central bank has been very hard on banks, telling them to lend more and not to rely on fixed income securities. And when banks complained about liquidity needs, the central bank brought out March 1 special OMO bills. So the banks have been focusing on special OMO bills and also focusing on loan creation. So yes, the hike in OMO bills will be mainly for foreign investors, and I don't think that the rate will increase as much as people expect, because we also expect this quarter about 2 trillion of maturities, both NCB and OMO bills, to mature into the system. And when that happens, we'll also find more demand coming into the market, where people would try to beef up their securities and their positions. So yes, even though yields are going to rise, or are expected to rise, I don't think that they are expected to rise as much as people are looking forward to.
All right, no, very important point you're making about the liquidity that is coming to the market. Okay, so let's look a little forward now. Next week, how do you see all of this impacting yields, and what do we expect in terms of perhaps maturities of other OMO of other OMO bills or other instruments in the market, and potentially what could take liquidity away from the market? Can you just give us your assessment of the coming week?
Well, yes, interest trading, we expected that due to the increased stock rates, we expected more supplies coming to the market, but traders showing secondary markets, and we saw few activities. So I expect that to continue into next week, where the focus will be on the NCB's primary auction holding on Wednesday. There's also T-bill OMO maturities of 213 billion coming in on Tuesday. So traders will be focused on those two things, mainly on the primary market, and I don't think much activity will be seen on secondary markets, where people are very, very cautious in trading, so as not to experience market revaluation losses.
All right, thank you so much for that. Final word, perhaps, on the exchange rate. Do you see more stability moving forward, or are you still concerned about where we're at right now, given the liquidity challenges that the central bank is facing?
Well, I see much stability. The central bank has been very up on their toes on that. We've seen different circulars. Today was one about deposit money banks prohibiting crypto firms from utilizing their services. Last week was about exporters and buying them from accessing banking services if they do not repatriate their export proceeds. So I think yes, that more stability will